Gold has surged past $2,700, setting new record highs. What's next for the bulls? Could we see a challenge to the $3,000 mark before year-end? Find out more in today's episode of As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has been on a roll, hitting new all-time highs. A mix of global central banks cutting rates, rising geopolitical tensions, and uncertainty around U.S. economic data and policies is fueling this gold rally. However, the increase in U.S. Treasury yields is putting some pressure on prices. This week, there are relatively few risk events on the horizon, but keep an eye on Fed's beige book and the jobless claims. They might lead to short-term fluctuations in gold prices. So in today's video, I'll break it down into three parts as always: technical analysis, reasons behind the movement, and a look at the risk ahead. Within this framework, I really want to focus on whether gold can break through that $3,000 mark. So let's get started. First, let's take a look at the daily chart for gold against US dollar. Since October 10, we've seen a nice upward trend that pushed prices past the $27 mark last Friday. Then it kept climbing, hitting intraday highs above $27.40 yesterday. That's also pretty close to the top of the upward channel we've seen since late June. The strong buying momentum has pushed the RSI into the overbought zone, above 70. However, yesterday's candlestick suggests that some bearish pressure is creeping back in. So if prices drop, the September high of $26.85 could act as support. While on the flip side, we've got $27.50 above, which is the resistance level we need to challenge. Well, after breaking through $2,700 and continuing to rise, traders are now wondering if gold has a shot at pushing significantly higher and testing that $3,000 level. Well, honestly, I think the chances are quite slim before the end of the year. I mean, sure, there are plenty of positive factors driving gold prices up. For one, central banks in developed markets like the ECB, RBNZ, and Bank of Canada are still on an easing path to help fend off recession risks. Plus, tensions in the Middle East and Korean Peninsula are heating up. Also, September's U.S. retail sales unexpectedly jumped by 0.4% month-on-month, while Trump's chances of winning are fueling market speculation about U.S. reflation. However, even though the U.S. economy seems to be headed for a soft landing or even no landing, the fiscal deficit hasn't improved at all. Looking at the policy stances of both presidential candidates, it's likely that this number will just keep increasing. So whether you are considering opportunity cost, safe haven demand, hedging against potential inflation, or concerns about the fiscal deficit, gold has a lot of upward momentum. I mean, I totally get how these factors are boosting gold prices, but right now I just don't think they'll be enough to push prices up to $3,000 by year-end. First off, we're seeing a lot of short selling in the U.S. Treasuries yesterday due to increased supply, potential tariff hedging, positioning against the red wave, and also some positive economic data from the U.S. The 10-year yield jumped by 11 basis points yesterday, crossing the 200-day moving average. Plus, the Trump trade, where people are betting on a stronger dollar, is putting short-term pressure on gold bulls. Second, it's pretty much a given that developed market central banks are in easing mode, and much of the rate cutting timeline for the rest of the year has already been priced in. So unless something extreme happens, rate cuts might not really do much to lift gold prices. To sum it all up, with the backdrop of rate cuts and safe haven demand, the least resistant path of gold is still upward. But we've got a ways to go before hitting $3,000. This week, we don't really have many major risk events to watch. And since the Fed emphasizes decisions based on labor market data, the beige book dropping on Wednesday and the jobless claims on Thursday will be relatively important to follow. If employment takes a hit, we might see the market bump up expectations for the Fed's rate cut this year, giving gold a bit of a lift. Also, the annual meetings of the IMF and World Bank in Washington, D.C., along with the Kaizen BRICS Summit, could impact the dollar, which would add some uncertainty for gold. So that's pretty much all for today. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!